When I found crypto, I was like, holy cow, like this is lightning in a bottle opportunity. It was Wild West. I remember getting into crypto, buying it on because I saw someone's FOMO social media post about the price of Bitcoin and how much money they made. And so just like everybody else, I FOMO'd in and bought at the wrong time in the market. But what I recognized was two things. Number one, I started just kind of nerding out on this whole blockchain idea and how it is connected philosophically with the idea of freedom. And then also just the velocity the asset class has because it's nascent, because it's new, because we're on the left-hand side of the bell curve. When you look at it on paper, like the market cap is under $1 trillion. It just has a lot of asymmetrical upside. The last thing about it is it's just it's an accessible asset class, like it's a accessible, high velocity, early opportunity for people, and you can outperform the stock market relatively easy. And crypto is kind of like a zoo. You go and there's animals there, but there's all kinds of species, and you just need to understand that with certain species of crypto, you get X. With certain species, you get Y, and with other species, you get Z. And understanding how to make those judgments and evaluations is really the part of becoming a mature investor, rather than just a crypto slot machine gambler who, just trying to catch lucky sevens.
Break free from modern-day slavery. Live the freedom trinity of financial freedom, time freedom, and location freedom. Live in true fulfillment with a foundation of growth and balance in health, relationships, spirituality, and having fun doing what you love most. Let us show you the way. Welcome to Freedom Hack Radio.
Welcome back to another episode of Freedom Hack Radio. I'm your host, Bryce Robertson. And today, my friends, we have a very special guest to talk about cash flowing in cryptocurrencies, which is a topic I know a lot of you want to hear about. And to join me speaking about that today is Josh. Josh, welcome to Freedom Hack Radio, brother.
Thanks, man. Honored to be here.
Well, Josh, a place that I really want to start, where I always start, is what's giving you the most gratitude today, mate?
Being a father, being a husband. I'm not good at either one of those, but I absolutely love it. I have teenage daughters, so it's full court press at my house. I'll be rushing off to an 8th grade basketball game here when you and I finish, and having a blast running businesses and living life to the fullest.
Beautiful, man. Well, Josh Rhodes, it'd be great if you could tell us your journey, your story, how you came from where you were to where you are today as an entrepreneur.
Yeah. Well, it all started in a very rural town in Alabama. I have an accent, as do you, depending on what part of the world your listeners are in. My vowel sounds are just very slow. And that's because I'm from just out in the country here in Alabama. And I grew up one generation removed from extreme poverty, lots of generational poverty and stuff on my side of the family. And I was the first person to go to college. Not that college is any kind of answer to anybody's problems, but it does usually indicate some level of socioeconomic barrier or lack thereof. And the only reason why I went to college is because I was a good baseball player. But yeah, man, growing up, there was not a lot of financial literacy. Wealth building wasn't really even an option. My dad was a Vietnam veteran, came home from the Marine Corps, started a business selling lumber, just a blue collar sales job. And my mom was a stay-at-home mom. My grandmother, for example, she made spaghetti with ketchup sauce, spaghetti sauce with ketchup because she couldn't afford ragu in a jar and tomatoes weren't always on the vine. And So we grew up, my dad kept us out of poverty, just barely, just because he worked so hard. And owning your own business comes with, a little bit more profit margin than the 9 to 5. And so grew up, played baseball all my life, went to college to play Division I baseball here in the States, and met my wife there in college. And after college, I'll kind of zoom through this part because I'm probably older than the average person listening to this podcast. I got into employment and quickly realized that I was not really an employee. Not that there's anything wrong with that, but that I'm an entrepreneur and sales guy and capitalist, and I wanted to increase my net worth. And the thing that really kicked it off was I read, this crazy book by this crazy guy named Robert Kiyosaki, Rich Dad, Poor Dad. And it kind of blew my doors off. And it changed my paradigm, I guess, of making money and passive income and real estate. And so I got into real estate investing, started some businesses, and I've got way more businesses in the graveyard than I do still standing, but that's part of it. And fast forward a whole lot, I discovered crypto about 5 or 6 years ago. And when I did, I was like, okay, wow. Like, this is an asset class in and of itself. I've been learning about asset classes, as I've gotten older and been a business owner, whole life insurance policies, real estate investor, all the different asset classes I was beginning to touch, except for like the boring stuff like bonds and et cetera. But when I found crypto, I was like, holy cow, like, this is lightning in a bottle opportunity. It was Wild West. I remember getting into crypto, buying it because I saw someone's FOMO social media post about the price of Bitcoin and how much money they made. And so just like everybody else, I FOMO'd in and bought at the wrong time in the market. But what I recognized was two things. Number one, I started just kind of nerding out on this whole blockchain idea and how it is connected philosophically with the idea of freedom. And then also just the velocity the asset class has, because it's nascent, because it's new, because we're on the left-hand side of the bell curve. When you look at it on paper, like, the market cap is under $1 trillion. It just has a lot of asymmetrical upside. And as a guy who is cool with volatility in the near term, I was in love because I knew that that's where you can really make the most profit. And the last thing about it is it's an accessible asset class. Like, if you want to go buy a multifamily apartment building, there's some barriers there, some legit financing barriers and sourcing barriers. But if you want to go buy $10 of Bitcoin, I've got a Strike app on my phone right now that I can, connect my fiat banking account to and have Bitcoin in the next 15 minutes. So it's a accessible, high velocity, early opportunity for people, and you can outperform the stock market relatively easy. And it just had all those traits, and I just fell in love with it and became obsessed and wanted to become a subject matter expert in it, and have put a lot of time, effort, and treasure into it. And I love it as much today as I did when I started.
Beautiful. So before, you were talking about the asset class, are you talking about cryptocurrencies as an asset class, or are you talking about Bitcoin? Because I kind of look at them as being like a little bit of separate categories.
Yeah. I think when I say asset classes, I mean large umbrella categories: stocks, bonds, insurance, businesses, and then crypto. And I could easily make the argument the same separation that Bitcoin and crypto are two different items or classifications, definitely. So maybe you could say that crypto is the 6th asset class and Bitcoin's the 7th, especially for all the Bitcoin maximalists listening out there. But I would classify myself as a little bit more mercenary in the way I deploy my capital, but very focused on the utility of certain things. I do agree you cannot conflate the nature of Bitcoin with Ethereum or any of its cronies on that side of the wall. They're just different. They're different animals. It's like crypto is kind of like a zoo. You go and there's animals there, but there's all kinds of species. And you just need to understand that with certain species of crypto, you get X. With certain species, you get Y, and with other species, you get Z. And understanding how to make those judgments and evaluations is really the part of becoming a mature investor, rather than just a crypto slot machine gambler who, just trying to catch lucky sevens.
And what are you guys focusing on over at Crypto Yol? You guys investing in different categories of cryptocurrencies?
Yeah, a lot of the people in my mastermind are busy professionals. They're going to have deployable capital that they want to invest more intelligently. They might be maxing out their 401ks or their IRAs, or they might, be fed up with the stock market or index funds. They might be looking for something that can compete with the S&P 500 in a month rather than waiting years. And so we invest in altcoins, we invest in DeFi, and we, of course, invest in longer term stores of value like Bitcoin. I have a business model for the portfolio that I created that I call the crypto flywheel strategy or method. And it involves 3 wealth strategies inside the model. So it's just a way, honestly, it's very simplistic when you hear me say it, but it's just a way to keep you from being a gambler. Because most people who dabble in crypto investing, they're like, yeah, I bought some Dogecoin because Elon was talking about it on Saturday Night Live. And, they see headlines and social media stuff. And I bought some Shiba Inu and the meme coins and all that stuff. And people end up getting fatigued because they buy, hold, and hope, and that hope never pans out, and they're not really investing in utility or true use cases. So what we do with the crypto flywheel method is we harness cash flow, appreciation, and leverage. All 3 of those aspects or characteristics are available in the world of crypto. And we just talk about how to use crypto to achieve cash flow, how to achieve net worth appreciation, how to achieve leverage so that you can buy more cash flowing assets. And that's just kind of like our methodical way to double and triple our investments over time and outcompete the stock market and other areas that people are already invested in.
And is DeFi your main strategy to achieve that?
I would say it's probably 80-20 principle. It probably is a 20% factor in what we do. Decentralized finance is really powerful when it comes to like being a liquidity provider and earning some really aggressive annual percentage yields. But you also have to know how to evaluate those treasury pools and those ecosystems that you're a part of because they also can, disappear like vapors if you don't know what you're looking for, or if you don't know what you're doing in terms of criteria judgment. But yeah, we use DeFi to create daily yield, and then you basically end up with a self-fueling car to some extent, because you can earn percentages a day on your capital, or fractional percentages a day on your capital. You're basically getting a dividend. It's like dividend stocks, except every day instead of every quarter. And so every day you're getting this dividend from, yield farming, for example, or trading bots, whatever. You've got some kind of net proceed every day. Well, what do you do with that net proceed, right? Well, you can take it off the table and use it for lifestyle expenses on some level, or you can recompound it, just earn yield on top of yield and use the rule of 72 in a very concentrated time frame. Usually I do that for 30 to 90 days. And then I take the yield on top of the yield, the ultimate yield, and I use that to buy the blue chips, kind of in the appreciation part of the flywheel, the blue chips that are at bargain prices, the chain links, the Bitcoins, the Ethereums, polygons, the things that we've done our research on. We know that it's going to be a part of the social fabric and commercial fabric that we live in. And that really helps us understand and stay disciplined instead of just like, turning the crank on the slot machine again, to use that analogy. It gives us a methodology to expanding our net worth with crypto. And you can start fractionally. That's the great part about it, is you can start with a small bag and you can snowball it up relatively quickly. Again, in comparison to waiting 50 years for the stock market to deliver your retirement. So there's a lot of pros and cons to it, but we have a blast doing it. And we use that method and DeFi, yes, plays a significant material role.
So you're not necessarily cash flowing on every acquisition or every purchase that you're making or every move that you're making within your portfolio, but it's part of the strategy is to be able to cash flow, to buy you some time to get the excellent buy opportunity, to buy some more cost-effective coins, so to speak. Are you cash flowing in other ways?
Yeah. And just to clarify, one thing is, like, I'm a big believer in dollar cost averaging. If you've been dollar cost averaging, if you're a Bitcoin miner, you're enjoying the dollar cost averaging effect over years and years, because you're getting that median price point rather than the extreme highs or the extreme lows, which no one can trade perfectly anyway. And so you're able to get that median price average where you're almost always in the black or in the profit, no matter where you are. So the DeFi farming and yield farming, decentralized financial yields that we're earning, is basically acting kind of like the Bitcoin mining rigs would act. They're producing a yield that we can use as dollar cost averaging fuel or firewood, if you will. And then, we have other little strategies that we deploy. For example, a week ago in our mastermind, I did a call with another member who has been doing what we call yield flipping, which is when you go on to a central exchange, which I'm not a big fan of central exchanges, and I'm not a big fan of hosting money there for long periods of time. They're kind of like, I think Charles Hoskinson of Cardano said that, I loved this quote. He said, central exchanges are like public restrooms. They serve a purpose, but you don't want to live there. And that a lot of people in 2022 were burned by central exchanges who, mismanaged their balance sheets and went bankrupt and took everybody's money with them. So the central exchanges are kind of like casinos. They've got all of these different games to play, and some of them are more aggressive than others. And I don't want to name names, but there's one specific central exchange where, they have a very busy interface. When you log in, they've got something for everyone, some place to put your money. And all they're trying to do is to get you to hold your money on their exchange. They want you to, because they need that liquidity. They want that. They are basically a bank that needs your funds to stay on their exchange so that they can continue to make trades at high volumes, because they make money from trading fees and exchange and swap fees. And so one way they do that, or they motivate you to do that, is through staking. And we've all had, your Coinbase or your crypto.com or your KuCoin or Gemini. It doesn't matter. They all have had staking. Here, put your Ethereum here, put your USDC here, put your Bitcoin here, and we'll pay you 2 to 9% annual percentage rate or something like that. Well, there's little strategies, though, from time to time that you can find that are like, instead of staking it for 6 months or staking it for a year, you stake it for a day and a half. And you can get like 127% annual percentage yields in a day and a half. You can't realize the 127%, but you get a day and a half worth of that rate of return. Well, I have a lot of members. I do not personally do this, but this is just an example to your question of different ways we cash flow. Is you can just simply do the staking for a day and a half. Sometimes it's like 1.6 days, and you might stake $1,000 and wake up, and make a little bit of fractional money 1.6 days later, pull it out, and then restake it in another option, because they're always changing the menu of staking. And so, but they're almost always really lucrative. So there's little things like that. You can also, we have trading bots and various trading bot desks that have the whole algorithmic approach to buy low, sell high, way more efficient than day trading and trying to be glued to your screen all day. But that's just a couple examples. You know, we get into NFT flipping from time to time. There's lots of ways, I guess, going back to the very beginning, where because we are where we are in the timeline, there's a lot of opportunities to flip and swap digital assets for extra cash flow.
If you're watching the market and you know what's going on.
Exactly. You got to have your ear to the ground. And you can't really just like buy something. And now in a bull market, it's actually fascinating. In bear markets, they're pretty punishing. Like you have to be very disciplined and you really got to know. In a bull market, you know, every idiot can spit in the wind and make money. It's just part of having liquidity in a market. It requires far less liquidity or far less discipline. But yeah, I mean, since December 2021, it's really difficult to make money in any asset class if you do not have a method to your madness. You know, the gambling slot machine approach does not work.
So earlier you touched on the concept of dollar cost averaging. For our freedom hackers out there that don't know exactly what that is, it's actually a strategy that people can use in the stock market. They can use it in gold and silver of precious metals and also use it in crypto as well. Do you want to just break that down and kind of explain it in layman's terms? So we know what that is.
You'll hear a lot of people say DCA for short. And a lot of people have, I would say, elastic definitions of what dollar cost averaging is, but let's just give an example, an illustration here. Let's say you just really love Bitcoin and you believe in it and you want to gobble up as much as you can. But hey, look, you got a paycheck, you got a mortgage, you got power bills to pay, groceries, kids, all that stuff, you know, like life comes at you fast, but you've got margin every month. You know, maybe you're saving $250 a month. I'm making up numbers. And you want to just dedicate all of it to building your Bitcoin purse. Well, you can set up, you know, either automated or put a calendar reminder on your phone, whatever you need to do. And you just know either every day or every week or every month that you're buying X amount of dollars of Bitcoin or whatever digital asset or whatever asset you want to own. And so methodically, systematically, you're just always buying. That's the idea. You're always accumulating. It's very much kind of like a Warren Buffett, you know, approach is like, I'm buying valuable things and I'm not interested in selling anytime soon. It's about the opposite of having a speculation strategy as you can get, because what you're saying to yourself is, I believe in this thing. I know that it has value and I have a limited amount of funds that I can attribute to it, but I'm going to do it with discipline. And so dollar cost averaging is the method or the practice of buying that asset methodically, no matter what the price is, with a fixed amount of money. And obviously you can go up and down with that money investment. That's totally your call. But what it allows you to, over time, what it does is it allows you to have a more averaged out price rather than a lot of people. Great example. I think that, don't quote me on this statistic, but it's kind of gross. Like it's something in 2021, when all-time highs were hit with Bitcoin and cryptocurrencies. I think, again, don't hold me to this, something like 40% of all Bitcoin owners bought during that season. Like first time owners. Mm-hmm. And so there was like this massive, you know, flocking to this asset during its highest price. And so now their average price of that, they've got a long way to go to get back to break even. And it's really difficult, but if you're dollar cost averaging, it's a lot less painless when you have bear markets, when you have corrections, when you have dips, but also you can still enjoy the bull markets and have, profits that you can take when things go hyperbolic and euphoric as they do in cycles.
Yeah. And so like on that example, if someone was buying Bitcoin at $10,000 a coin, and next month they're buying at $15,000 a coin, and the month after that, they're buying it at $20,000 a coin, then the average would be $15,000 a coin. And they're kind of like hedging themselves against the ebbs and flows of it. And you were kind of touching on this. An interesting thing is, and David Morgan came on and spoke about this, is that dollar cost averaging is usually a strategy that people talk about when you're buying into something. It's also a way to sell out of something, because we don't know exactly where the top is. And instead of blowing our whole load on guessing where the top is, we could, sell a portion off. Where we think it's at the top, and then kind of keep selling portions off, and we might get closer to catching the top that way and kind of averaging it out.
Yeah, I agree. I agree with David, and we use the phrase, make sure you take your profits on the way up. Some people call it scaling out, but knowing, when you're an investor and not a gambler, investors look ahead with a goal line, with a finish line in mind. At Crypto Y'all, we call it our ferociously specific desired outcome. It has to do with a date and a dollar normally. Now, obviously, it's hard to put a date on when bull cycles are going to start and begin. But we do, when we buy in or when we're dollar cost averaging into something, we look ahead and go, okay, let's just take Chainlink, for example. It's a crypto that I really adore. And I purchase it frequently. Chainlink, I remember when it was 80 cents, and by November of 21, it was $55. Did really well on that asset. And moving into, you don't know that November is the top. And so I started taking profits around $15, $20. Now, some people listening be like, man, you left a lot of money on the table. Yeah, but that's called greed. And that's what gets people locked up. And the number one reason that I've found in my exposure to retail investors is the number one reason that they don't make money. Like if you fail at investing, it's because you have failed to take profits, and you may have even bought low. You may have entered a market low, but if you don't have a profit taking strategy, to your point, then you end up literally not knowing where you are in the market. You could crest the top of the wave on the charts and come riding right back down. I know a lot of people who bought during the COVID crash. They bought low, and then they rode it all the way up November 21, and then they stayed. They didn't take profits. And now they're right here where you and I are at the time of this podcast, and they're in the doldrums. And so it's just painful. And then that's where you see like a lot of the capitulation and fatigue sets in. So it's good for you, almost like an athlete. It's good for to be conditioning, because markets move in waves. You'll always have another opportunity to re-enter at a lower price. You'll always have another opportunity to take profits. It's just having an anticipation mentality is a big part of it.
And to be able to psychologically handle the ride too, because Warren Buffett's got a saying that says only dead fish go with the flow. I like to use that all the time because it applies to so many things in life. And I think one of the things it applies to is the fact that if you're waiting for the general public to be doing the move that you're just about to make, it's already too late, So, there's other strategies out there. So I'm curious, I know none of us really want to get into the weeds of predicting exactly what's going to happen. But what scares you the most over the next, say, 12 months in the crypto space? And maybe even if you wanted to branch out on any macroeconomics on that.
What scares me the most would be, it's not it's when it happens, is the use of central bank digital currencies by governments. That's honestly, my biggest fear, just on a pragmatic level.
Mm-hmm.
I'm one of those guys who welcome a level of regulation from governments. Again, just from a mercenary capital standpoint, when regulation happens, and hopefully it's regulation light. But we all know what happens when governments step in. They just continue to increase their foothold. But hopefully we'll have a season of light regulation that will enable pension funds and sovereign wealth funds and big money players to enter into the Bitcoin market, the crypto markets, and have 1%, 2%, 3% exposures in their multi-trillion-dollar portfolios. The only reason why they'll be able to do that is because there's, the United States Congress said so. It said it's okay. And then it'll give all of the agencies like the SEC and the CFTC guidance on how to moderate and play referee in the markets, and everybody will feel safe, and it'll change things. The landscape will be different. It'll be less of a Wild West. Some of us will miss the Wild West. Some of us will be glad it's gone. It's just going to be, preferential, but yeah, ultimately, I really hope that the CBDCs, central bank digital currencies, do not turn into, for lack of better words, I guess, just like a social credit card score that starts to affect our freedoms. That's my biggest fear. And some at this point would say it's more conspiracy theory, but, think about all of the stimulus checks that the U.S. government has written in the last few years and how much easier it would be for them to facilitate that, and cheaper to facilitate that through, if you and I had our own central bank account and they don't have to send a check to our mailbox. They can just airdrop it in a CBDC in the form of a US dollar, Australian dollar, British pound, whatever country you're in. And boom, it's there. It's just like instant stimulus. Well, what prices come with that stimulus, for us as citizens? So I'm fearful of that to some extent, but I'm optimistic that we'll get some incredible profit-taking opportunities in the next 24 months. Simply because it will have rules of engagement, and that's a big deal when it comes to early markets like we're in with crypto.
So let's talk about that in a minute, the upside. Touching on what you're touching on here, I think people who say that something like that is a conspiracy theory are probably just not educated enough on the topic. Right. Because I'm seeing the US trying to roll out bills like this. The UK, Australia, Europe, they're all working on the same concepts of bringing some kind of centrally controlled digital currency to the table. Oh, yeah. I've seen some of those documents behind the scenes, and some of those documents say that in those circumstances, when the banks get in a situation in the past where they needed to be bailed out, they no longer need to be bailed out because the systems work differently. It's very advantageous for the powers that be. It's not very advantageous for the general public. So I am too. I'm a little concerned about it, and I think it's more of a time of when is that going to happen as opposed to if it's going to happen. It's definitely something for us to look at there. One interesting point I just wanted to touch on super quickly, and Mark Moss actually touched on this recently in one of his videos, and he was pointing out the fact that when it comes to regulation, the Securities Exchange Commission actually governs securities, and most cryptocurrencies fall under that category because of the way that they're structured. The interesting way that Bitcoin was set up is it's not actually a security. Yeah. So when regulation comes in, put cryptocurrencies in one category and Bitcoin in another, which is going to be, that'll be interesting to see how that plays out because they're two very different categories, from
totally
a regulation standpoint.
Yeah, I think there are a lot of early signals that the CFTC will be the regulating body of Bitcoin as a commodity rather than a security, which is good. It's great. I mean, it's what we want. And the again, governments tend to create confusion, uncertainty, but like, if you follow the SEC's relationship with XRP and Ethereum, SEC, at a previous date deemed Ethereum not a security. When by, if you use the traditional Howey test and all of the other things that they tout, it probably is a security. And then you take the XRP though, and they've had a lawsuit with XRP since 2018 that's probably created more damages to XRP holders than the SEC was trying to prevent from happening with their lawsuit to begin with. And we really need that's when you have like government bureaucracies starting to take autonomous power or taking it arbitrarily too far. We need someone to come in and make laws that either hold those bureaus back or tell them that they can proceed with enforcement. And at the end of the day, that's what I was saying. Like we need light regulation. I hope it's not too heavy-handed. I hope it just draws the lines in the sands, makes some definitions, and then we can all make our investment decisions based on, what we need in our own lives.
I just wanted to quickly say that Josh and myself, we're not CPAs, financial advisors, or anything like that. This is just a conversation we're having. We're giving our 2 cents on things. It's for educational purposes only. It's up to you guys to come up with your own financial decisions and reach out to your own financial advisors and CPAs and attorneys to make those decisions. This is just our opinion and for educational purposes. I want to point that out. And one thing that I really notice is that you look at the stock market, you look at cryptocurrencies, you look at a lot of markets, and human psychology is the main thing that drives it, which goes back to only dead fish go with the flow, because usually the best buy opportunities is when everybody's scared. And usually the best time to like hold off on things is when everybody else is going for it. So, we've got Bitcoin mining funds. We've been pretty bullish in the Bitcoin space. And I've seen investor hesitancy from a massive scale since Bitcoin's dropped and a few things have happened in the crypto world recently. Can you speak to that? Can you speak to, the average investor and, what kind of thoughts would you share with them to ponder on?
Yeah. I mean, to get to borrow words from Uncle Warren some more, I think paraphrase quote from Buffett that there's no such thing as bad markets, just bad market entries. A lot of the people who are fatigued right now had a bad market entry. They literally put their boat in the wrong boat ramp when it comes to investing at the wrong time. And so it's easy to become discouraged by price action in the short term. So 2 things that I always like to remind myself is, number one, what's my time horizon on this capital here? What is it, a short-term time horizon? Is it long-term? That will inform what kind of assets I'm investing in to begin with. And then number 2, to understand what's going on in the market, understanding that the crypto market has pulled back 75% since November 2021. And, it might go down a little bit more. There's a good chance it can. No one knows if it will or not. But the upside, if you look back at history, if you just take Bitcoin's price action in historical cycles, if you look back at the charts, there's always corrections, there's always cycles, there's always depressed prices, and then you go to all-time highs, and the cycle repeats itself, very much like the S&P 500 does. And so I would say to anyone who is experiencing fatigue in the crypto market to zoom out and to identify where you are on the map. It's kind of like going hiking without a map and a compass. If you don't pay attention to what's happening on the macroeconomic, geopolitical scene, there's a lot of narratives that I'm following right now. When I say narratives, I mean, developments or possible developments that could affect prices negatively or positively, things like the war in Ukraine, creating a massive amount of uncertainty in global markets. Markets hate uncertainty. if that war were to end, no matter how it ends, honestly, this is an apolitical comment, whether it ends with Ukraine falling completely to Russia, or they come up with a peace treaty, whatever, when that war is over, the markets will experience some level of rebound. That's one narrative. Another narrative is the big one, which is the Fed. There's a great saying, don't fight the Fed. Well, the Fed has been punishing everyone who owns assets over the last 9 to 10 months by increasing rates at the highest rate hike, acceleration that we've experienced in our lifetimes, at least since the early 80s. And that pace that the Federal Reserve has been moving at has been breakneck and punishing. But the narrative now is that the bond markets are telling the Fed, hey, this is not what we need to do. The United States national debt it just cannot be paid if they continue to raise rates the way they're hawkishly signaling that they will do. And inflation.
Can I just add a little bit of color to that? Because I'm actually in the real estate world and seeing behind the scenes. I mean, we've still been buying mobile home parks through this time. We're actually buying like 50% occupied properties. So we've got a really unique niche in the market. But we're seeing like lenders desperate, lenders dropping off. We're seeing people, title companies firing tons of people and laying people off. A lot of loan underwriters are being laid off. There's a massive understaffing movement happening behind the scenes. It's not being spoken about anywhere. No, like doors are closing and all this, and like the general public has no idea because nobody's really talking about it yet. But I mean, there has to be some kind of like impact to that as well in lag,
Yeah, exactly. And speaking of lag, that last variable I was talking about is CPI, that consumer price index, the inflation score. And I just, you got to watch it. That's the narrative that kind of plays hand in hand with the Fed. The Fed, that's one of their two mandates. And it's been coming down, and I think it's plummeting. And that is a lagging metric that the Fed looks at and tries to make real-time decisions in. So they're always behind, just almost like by definition or nature or DNA. And so we're now in phase 2 of what's traditionally called the Fed pivot, which is the funny choreography that the Fed always does during these cycles that they just won't admit it. But we all, from outside perspectives, can look in and go, of course, this is what you always do. The second step is what he did, what federal, the Reserve Chairman Powell said, I think in his December 5th or 6th conference, he came out and said, we're not going to raise 3/4 of a basis point. We're going to do 1/2 of a basis point raise, and moving forward, we're going to continue to raise rates, but not as aggressively. That tone was very much a contrast compared to the previous 4 to 6 months of hawkish actions and verbiage from him. And so now we're moving into, like, even today, he came out and made his January speech, and he did not even mention monetary policy. He basically gave a speech on how the Fed has to stay non-political. He talked about like environmentalism and how the Fed doesn't play a role in that, and how it doesn't play a role in the decision making. So I'm just sitting here going, wait a second. He's been on a rampage, and he didn't even talk about that rampage anymore, and he's not even projecting any longer like he has every other meeting. So I'm going, okay, then my little internal theorist comes out, and when I start looking at these narratives at work and coming together, I'm like, okay, strong, again, not financial advice, not telling anybody what's happening next, but it's like, okay, well, maybe, like, what happens if he comes out in February and says, this is the last raise, we're gonna flatline this, and we're not going to raise rates for the time being, for whatever amount of time. that's phase 3 of the pivot. And then the phase 4 is, hey, we're actually cutting rates. Yeah. We've got mortgage brokers. I spoke to one the other day. I have a real estate marketing agency, and we obviously talk to mortgage brokers a lot. And I was speaking to one guy kind of on the sidelines the other day, and he was just like, yeah, I have not received a phone call in 4 weeks. This was early December.
Mm-hmm.
And that's just like, to what your example is just like, okay, yeah. I mean, like it's starting to constrain even the real estate asset class, which is usually the last to start feeling it. And honestly, the most painful one that the economy feels is when the constraint happens there. So yeah, I think there's some really interesting narratives that we've got to keep our eye on. Another one is the SEC lawsuit against XRP. If XRP gets off with a slap on the wrist, or if there's some settlement, or if the judge rules in their favor, it'll be a boon for crypto and Bitcoin too. So watching those narratives, but specifically the Federal Reserve, is a massive thing to pay attention to. And it doesn't take an Ivy League degree to follow what the FOMC is doing. It's just, it doesn't. Raising rates is bad for assets. Lowering them and printing money is good for assets. Now, to the CBDC discussion, another outside narrative that I have, or opinion that I have, is that I follow the DXY pretty closely, which is the U.S. Treasuries Index, or the strength of the U.S. dollar in relation to the 5 major fiat currencies of the world, like the pound, the yuan, the euro, et cetera. And the DXY from November of 21 to November of 22 was on March upward and to the right. Well, when the DXY is going up, it means the US dollar is punishing every other asset class and every foreign economy on the planet, just because things are getting more expensive, because all of the commodities of the world are settled in US dollars. So it's getting more expensive to buy wheat and gold or oil and et cetera. So the DXY has rolled over. It's starting to lose its value. It's starting to lose its support. And when you turn on the money printer and you start doing all the crazy stuff that the US government's done the last 10 or 15 years, it's going to continue to weaken that dollar over and over again, cyclically. And then you start bringing in CBDCs, which really only accelerate the abuse of governments in the monetary system. So it's going to be interesting. Like there's a little devil on my shoulder that says, yeah, bring on the CBDC, because that'll just put the dollar out of its misery earlier. Shorten its life cycle. And maybe the world will turn to Bitcoin as the world reserve currency faster than it anticipated.
Yeah, I don't know. Like, you and I are both not fans of the CBDC holistically, because we don't like the freedom loss and all this kind of stuff that would happen from it. But we see it as being some kind of inevitable change that would happen. And right now, I agree with you, dude. It's like boiling frogs, man. It's like, how long are they going to drag this thing out? Much longer than I'd rather just rip the Band-Aid off, man. But
yeah,
this is going to be a slow burn. And I think that's part of the psychology behind it, because then people get to the point where they'll be like, solve the problem. And then they can step in and say, well, glad you asked, because we've already got a problem solution prepared for you. It's kind of like all part of their strategy. But unfortunately, I think this one's going to be a really slow burn.
Yeah. Gradually, then suddenly, I think, is the way it normally goes.
Yeah. Because once the first real legit domino falls, then I think it could be quite interesting, like something we've probably never seen in history. But while all these things happen, this is not a episode about all the doom and gloom. We have to be aware of these things. We're definitely in times of uncertainty. There's also a lot of abundant opportunities and things to be really, really excited about. So on that note, what's got you most excited about 2023?
2023 here in the markets, specifically, man, I think the economy is going to suffer longer than the markets do. I think it always does. I think the markets are usually 4 to 6, maybe sometimes 8 months ahead of the economy. So So what I'm not excited about is just the drudgery of the Main Street economy and the suffering. What I am excited about is I think there's going to be some great opportunities to take some potentially life-changing profits for many people if they are paying attention. If any of those previous narratives that we're talking about or we mentioned play out, there will be some significant market movements in the profit-taking realm, for lack of better words. And that's going to be, I would just say everyone needs to be forewarned. Like, there's going to be another shot at this. You've been in a bear market for 12 months and it's been terrible. You're about to get another shot. Don't miss it, because wealth is built when you take profits on the way up. You hold your capital on the sidelines, you wait for the market to correct, and you get back in. And that's what I'm most excited about, is when those waves crest and you're able to finally go, I won this round from the market, rather than, because what happens in markets is that retail investors, and what I mean by that is all of us normal folks on Main Street that aren't sitting in a government bureaucratic chair of power or Wall Street bank. Those are market makers. Those market makers they a lot of times entice us into the market. They lure us into the market with green candles and FOMO. And we put our hard-earned dollars in there only to become the liquidity for some bigger titan to take and sell and dump on us. And then we have all this coin or stocks or whatever security it is in our hands that is less valuable. And so you need to be aware that markets rebound and anticipate that. So I'm anticipating a market rebound. When that happens, I don't know, but I've got my game face on, and I'm ready for it.
Do you feel comfortable sharing any of the indicators? Say, for example, let's choose Bitcoin. Would you be comfortable sharing some of the indicators that would let you know, oh yeah, we're getting back in the game, baby?
Yes, without doing technical analysis on your podcast, like, I would have an extreme level of confidence if Bitcoin surges through 35, 38, 38.5 in price, that we're in a significant reversal of what we've been experiencing the last year or so. 40K would almost be like a no-brainer. Yeah. But, that's a long way from here where we are right now.
Mm-hmm.
And a lot of people who entered recently would double their money or more. I think there's a really good chance that we see, 10 or 15% leg down from here. But with every day that goes by, there's a really good chance that we put in our bottom back in June of 2020 or December of 2022. And with every day that passes, it becomes statistically less likely that we'll see another bottom, and more possible that we start to reverse course and head back up. So yeah, I would say once you cross that $30,000 psychological line, you really need to be looking around going, okay, what are we going to do here? And that's when you really need to pay attention to what Bitcoin does. And again, the macro narratives that support that price action. And then when we start bursting through 35, 38, you're in a reversed market, in my opinion.
Thank you. So, I've got some joint venture partners and people that I kind of work with behind the scenes in this investment world. And they're actually telling me that your mastermind is pretty badass and that you guys are moving and shaking and you have a really good platform. So for someone who wanted to take on that kind of venture, what would be involved for them and what would it look like, and how are you supporting?
Yeah, I have a mastermind. It is geared toward the person I mentioned earlier in the podcast. You're busy, you're a professional, you don't want to do day trading. I'm not a day trader. You want to harness all of the power of the different classes of crypto. You want to outperform the stock market, and just for the record, like I'm a real estate guy who loves crypto. Basically, is kind of the school I come from, and I'm also a business owner. I love businesses. I think businesses probably are one of the greatest ROIs on the planet. But when it comes to crypto, if you want to be involved in my mastermind, my strategy, my method takes 30 minutes a week to manage it. Once you're up and running, we have a small cohort training model where you go through some training modules on the front end, and then you're a part of a community for 6 months to a year, where we basically crowdsource market intelligence for each other, and we provide human support so that you're not on an island. Doesn't feel like you're dealing with some big corporation or some random trading desk that's off seas. If you need to talk to someone, if you need to jump on a Zoom call and do a screen share, if you need to ask somebody a question about your wallet or transferring one coin to another or swapping or whatever that might be, you have human support. We keep it, it's a boutique mastermind. It's small. There's a couple hundred members. There's not 30,000 rainbow chasers in our Discord group trying to get rich tomorrow. It is all about people building net worth. And we also do alternative investment stuff as well. You know, we talk about short-term rentals. We talk about e-commerce. We do a few things, but 99% of what we do is crypto flywheel related. So
I'm assuming there's some pretty cool kind of networking, problem solving benefits from being of that part of that kind of group too.
Yeah, I've got some great, I mean, the members are the best part of my program, you know, everything from syndicated real estate funds, you know, hedge fund managers, financial advisors and wealth management advisors who are trying to just stay on the front end of the curve so that they can help their clients when it's regulated, or business owners, key executives, sales executives. I would say that we're a family oriented people. Like, if you don't have core values that are familiar or friendly to family values, then it's probably not a great place for you. You know, we have a member right now whose kid's in the NICU, and we're helping them out. So, and not, you know, very few of us have met in real life. So it's not just about money and greed. It's about us growing as people and having a network of aligned core values that we can help each other out with. So that's one of the awesome parts about crypto, y'all. You know, from where I'm from, we say y'all instead of you all, and it's indicative or representative of the Southern hospitality that I want the rest of the world to enjoy. And so I kind of wanted to merge that hospitality with crypto, the greatest financial instrument ever created, and putting those two together, we get crypto y'all. So if they want, if people want to learn about that, they're welcome to honestly email me directly, or go to cryptoyall.co/crypto farming. And I've got a little application there. It's just, I ask you a few questions. It's kind of a qualification thing. And then after they fill out that form, it'll put them onto my Booker, my scheduling calendar. And I talk to every new member that comes through. It's a quality over quantity thing. So that we're in alignment. I don't have some massive sales team or anything like that. We keep things small purposefully. So if you're interested, you could go to cryptoyall.co/crypto farming. Or you can email me, josh@cryptoyall.co, and we can set up a time to chat that way too.
Beautiful. Thanks for sharing. And for all of our freedom hackers out there, we're going to have links below in the show notes to the email and also to access that mastermind as well. So I know you're a freedom advocate, and obviously we are here at Freedom Hack Radio. So what's some things that you're doing in your life right now, and maybe things you're looking to do over the next 12 months to expand your freedom?
Man, so freedom is such a big deal. You know, like, I'm very involved in my state political scene. I'm on a board of a independent news agency here in the state of Alabama, interacting with a lot of state lawmakers about Bitcoin specifically, and the state treasury possibilities. There's a lot of states in the US who have been ahead of the curve, like Wyoming and Montana, when it comes to crypto friendliness. So I'm really trying to pave the way for my kids so that they can grow up in a crypto friendly state, and also one that is fiscally responsible and not dependent on DC. So that's one thing I'm just doing my best, putting my shoulder into, just from an activism standpoint, if you will. Other types of freedom, obviously, like financial freedom. I continue to invest in other businesses. I'm launching 3 e-commerce stores this month. I have a consultancy on the side where I help folks with their online businesses, and I have a blast. But my main focus is crypto, y'all, and the freedom achieved in taking profits in an awesome crypto environment. And let's see, location freedom, man. My family, we love to travel. We've done all kinds of cool trips. We're not afraid to go to London or Europe or somewhere else where it's either sunny or snowy or whatever season we're in the mood for. So we're going to do what we want to do and try to do that before the kids all graduate high school and we lose those moments.
Beautiful. Any awesome trips coming up or anything on the cards?
Yeah. I don't know if you've ever been or heard of Charleston, South Carolina, but going to be visiting there really soon. Awesome food scene. I'm a big fan of South Carolina. I think it's one of the most underrated states in America, and they've got great beaches. They've got great food, great culture, and excited about it.
I'm sure you'll be digging into some seafood down there.
Absolutely.
Beautiful, man. Nice. And so you got kids, and how do you instill these kinds of qualities? Because really, we're talking about the financial stuff, but you and I both know that at the end of the day, it doesn't really have anything to do with money. Money isn't the thing that we want. We either want our time back, or we want to be able to contribute to the world or our family or people in some manner. So how are you instilling these qualities within your family?
The biggest thing I'm trying to help my kids with, and this may be right or wrong, and I'm sure there's plenty of fathers out there listening that would correct me. The number one thing that I want my kids to have is the awareness that I did not have, both financially, but also from a purpose standpoint. I wasn't aware until after college that I could really choose what I do with my time. We were in the machine, we were part of the system when we got spit out of the other end of the conveyor belt. And so I'm trying to help my kids have that red pill moment that hey, you're an autonomous person. You're an independent thinker. Think for yourself and don't go with the crowd. And one way of doing that is just helping them understand that you can earn money. You don't have to have someone else to earn money if you don't want to. And I'm kind of starting there. Obviously, we have, faith traditions and things like that we're instilling as well. But probably one of the most practical things is just helping them not be afraid to be an entrepreneur if they want to be. I believe in entrepreneurship. I think entrepreneurs are exceptional people that provide exceptional solutions to really, really exceptional problems. And I think that without them, as Ayn Rand famously put it, the Atlas will shrug and stop being productive and walk away from the field and be done with innovation. And I hope my kids can actually persist through those kind of discouragements and be productive on their own terms. So that's the best shot I'm doing. Am I doing it successfully? Ask me in 10, 15 years.
Good for you, man. You're making the moves, and that's awesome. And I think, especially teenage kids, with the way that kind of culture and age group in this day and age in the Western world actually acts, so many people are crowd followers. So many people do what other people are doing. And for someone to be able to stand in a room full of 30 or 100 people and have a different opinion, be able to voice that, I think in today's environment could be one of the most beneficial qualities in 10, 20, 30 years from now.
Totally agree.
Awesome. Well, really appreciate you coming here today, sharing a lot of wealth of wisdom about our markets and giving us your 2 cents and telling us about your mastermind. Before we wrap up here, mate, any final thoughts?
Yeah, I would just tell everyone to be encouraged, especially in the markets. Brighter days are ahead, and there's a lot of innovation. And whether you know it or not, the industries that you interact with every day, supply chains, storage, digital storage, internet hosting, cell phone towers, Internet of Things, it's all going to go, it's going blockchain. So embrace it or die is kind of the motto at this point.
That's interesting. I've got older investors in our investment group that are like, all right, I'm into this crypto thing now. I suppose I can't resist it any longer. It's happening. So all right, what's the deal?
You have to convalesce. Yeah.
Yeah. Beautiful. Well, thanks a lot. Josh Rhodes from Crypto Y'all. Really appreciate you coming here on Freedom Hack Radio today. And for all of our freedom hackers out there, until next week, live large, live free. G'day, this is Bryce Robertson. I'm your host here at Freedom Hack Radio, and I truly, truly hope that you got a ton of value out of the episode that we just shared with you. And if you did, make sure to subscribe on your YouTube channel. Make sure to subscribe to your favorite podcasting platform. Hit the notification button so you can find out about the next episodes as they come out. Because if you haven't achieved financial time and location freedom, you really need to be dialed in here. So make sure to subscribe and follow us along as you grow on your path to financial, time, and location freedom here at Freedom Hack Radio.